Japan is in a complete economic meltdown. How will this affect you? By the end of this discussion today, you will better understand what is happening in the investment world and what you can do to protect yourself and invest wisely. So watch to the end. I'm Stan Perkins here, back with more financial and life skills information to help you on your journey to financial freedom. Today, we're diving deep into the current economic landscape and what it means for your financial future. So grab a notebook, take notes, and stay with me till the end, because this is going to be packed with valuable information. Let's kick things off with a look at the big picture. What's happening in the global economy? We're currently witnessing one of the most significant financial shifts in decades. On August the 4th, 2024, the Japanese Nikkei lost 12.4%, which loss was the worst day for the index since the Black Monday of 1987. Japan, which once nearly overtook the US economy, is now facing a major challenge. The Japanese yen is trading at a 38-year low against the US dollar. This has sparked a surge in tourism, with more than 900,000 Americans visiting Japan in just the first 5 months of 2024 alone, a 17.4% increase from last year. But here's the kicker. While everyone is flocking to Japan to take advantage of the weakened yen, we are seeing echoes of history. Back in the 80s, Japan was on the brink of overtaking the US economy, buying up American assets like the Pebble Beach Golf Resort, Columbia Pictures, and even Chrysler Building. They were manufacturing and exporting tons of products into the USA and world markets. Their economy was one of the best in the world, and things look rosy for the future growth. Fast forward to today. Japan's once dominant economy is struggling to recover from what's known as the lost decades. So what can we learn from Japan's economic history? One key lesson is the impact of government policy on economic stability. The Plaza Accord in 1985 played a massive role in Japan's economic trajectory by devaluing the dollar and forcing Japan to deregulate. This move led to an overheated economy with stock and real estate bubbles that eventually burst, causing decades of economic stagnation. Today, there is a massive surplus of savings, which in the past supplied the needed capital for loans fueling the expansion of industry and infrastructure. With the economic downturn worldwide, this savings surplus has become a drag on the economy, especially considering the low demand and low interest rate that the lenders on the savings can derive if someone is willing to even take out a loan. Along with the inefficient and overly restrictive policies of the Liberal Democratic Party of Japan, as well as the lack of leadership to implement viable solutions, a massive economic bubble in high prices and low production due to decreased demand has fueled the current Japanese recession. Until recently, Japan had little or no inflation, which allowed their economy to remain somewhat stable despite the troubled economy. But with the worldwide inflation, Japan was forced to raise interest rates, which also increased inflation and caused the meltdown to spiral out of control. Resource-poor Japan is dependent on imports for 94% of its primary energy supply. Japan's energy supply structure is extremely vulnerable. Japanese imports about 40% of its foods from various countries. Now, if a country must import such vast amounts of energy and food at the ever-increasing cost worldwide, you can see why they are in the situation that even a little bit of inflation like Japan is experiencing will cause massive price increases and fuel an economic disaster like what they are experiencing today. The takeaway is clear for the rest of us. Always be cautious when you see rapid economic growth fueled by easy credit and speculative investments. It's a reminder to keep our financial foundation strong, diversified, and grounded in realistic expectations. As we've discussed previously, the economy is a worldwide economy now. Despite each country having its own intricate and differing financial markets and economic policies, What happens in one country eventually and often immediately affects worldwide economies, especially those of the USA, China, and the European countries. Russia's economy has also slowed to 4% in the second quarter of 2024, down from 5.4% in quarter one. While the Russian economy continues to expand, it marked the lowest quarterly GDP growth result since the beginning of 2023. China's economic recovery was slow to emerge since it eliminated its zero COVID policy in the late 2022. China's growth of 5.2% in 2023 exceeded the previous year's 3%, but is still considered lagging by historical standards. The U.S. gross domestic product, real gross domestic product, GDP, increased at an annual rate of 2.8% in the second quarter of 2024. In the first quarter, real GDP increased 1.4%. These rates are all lower than expected and seem to be under pressure to decline further. Overall, the entire worldwide economic picture seems to be in a roller coaster-like ride and could be positively or negatively affected by whatever world events, including war, natural disaster, or political rumblings, seem to come up almost on a daily basis. For the rest of us, the takeaway is clear. Always be cautious with your investments. It's a reminder to keep our financial foundation strong, diversified, and grounded in reality. Now let's bring it back to what's happening today. The U.S. stock market recently saw one of its worst days since COVID, with the Dow dropping more than 1,000 points. Japan's Nikkei index plunged 12%, marking its worst day since 1987. These are not just random fluctuations. They are the results of complex global factors, including Japan's recent decision to raise interest rates after years of near zero or even negative rates. What does this mean for you? It's a wake-up call. The global economy is interconnected, and changes in one part of the world can have ripple effects everywhere else. If you're heavily invested in stocks, especially in volatile markets, it might be time to reassess your risk tolerance and diversify your portfolio. We need to remember the power of patience and diversification. In times like these, it's more important than ever to stick to the fundamentals of investing. Patience is key. Building wealth is a marathon, not a sprint. Focus on consistent, long-term investments rather than trying to time the market. Diversification is your best friend, whether it's through stocks, bonds, real estate, or even cryptocurrencies. Spreading your investments reduces risk and helps protect you against the market volatility. Let me share a story. Back in the day, I made the mistake of putting most of my investment funds into one large project. It looked like a sure thing. But when the economy took a downturn, I panicked and was forced to sell at a loss. That experience taught me the importance of not putting all my eggs in one basket and patience. Now I always ensure my investments are diversified across different asset classes. So what should you do in the face of this uncertainty? Here are some practical steps. Number one, keep an emergency fund. Always have 3 to 6 months worth of expenses saved up. This will give you peace of mind and prevent you from having to sell investments at a loss if things get tough. Number two, stay the course. Don't panic sell. The temptation to sell when the market drops is strong. But remember, markets recover and selling at a loss locks you in your losses. Number three, diversify. As I mentioned earlier, spreading your investments across different asset classes can reduce risk and increase your chances of weathering any financial storm. And number four, keep learning. The more you know, the better equipped you will be to make sound financial decisions. Continuously educate yourself about personal finance, budgeting, and investing. In conclusion, the current economic situation may seem daunting, but with the right strategies, you can navigate these turbulent waters. Remember, building wealth is about consistency, patience, and smart investing. Keep learning, stay diversified, and don't let fear drive your financial decisions. If you have any questions, please drop them in the comments below. And don't forget to like, share, and subscribe to this channel so you don't miss out on any of the insightful information that will be coming. Let's continue this journey together towards financial success and living the good life. I'll see you at the next session. Thank you.